And if this is your first time of coming across this channel, please do well to subscribe to this channel, turn on the notification bell to get notified when we upload our weekly content. Okay, and in today's video we're going to be looking at still on the smart money concepts trading model, the episode 7. Okay, we're going to be talking about institutional market structure. Okay, we're going to be talking about institutional market structure, and I know for some time now we have not been able to continue with the live trade experience series, and I promise us I'm going to do 1 or 2 videos on that series. Okay, we are still going to continue those series, and the smart money uh the smart money concepts trading model series is actually taking up a lot of our time. Okay, but we are going to get back to that. So let's get started on today's videos. Okay, we're going to be talking about institutional market structure. Okay, so now we're going to look at institutional market structure. What is institutional market structure, and how do we identify institutional market structure in forex? Okay, someone actually made a request for Smt Divergence. Okay, smart money to Divergence, or smart money. So this is actually a video on that. Okay, the institutional market structure is actually about the Smt Divergence. Okay, so now what is institutional market structure? Okay, the analysis of correlated assets, or the relationship to inversely correlated assets. Okay, that is just the definition of institutional market structure. Then the purpose is to determine what the smart money is accumulating or distributing. Okay, so then the third thing we are going to be looking at is currency are easy to analyze with institutional market structure with the USDS. Okay, which is the dollar index, with the dollar index. Okay, so we are going to be mainly focused on pairs that are actually paired against the dollar, okay, which are that's going to be the focus of this teaching. Okay, so you're going to the SMT divergence is actually focused mainly on pairs that are paired against the dollar. Okay, so now every price swing should be studied to determine if market symmetry confirms it. Okay, if market symmetry confirms it. Now, how do we identify institutional market structure in forex? Okay, the first thing here is compare every price swing in the dollar index with the foreign currency you trade. Okay, then as the dollar index trades higher, expect a lower price swing in foreign currency pairs. The third thing, if dollar index or a foreign currency fails to move symmetrically, smart money is actively trading. Okay, underline this word: smart money is actively trading if the dollar index or a foreign currency fails to move symmetrically. Okay, we're going to look deeply into that. I'm going to look at what that actually means. Okay, then as dollars as the dollar trade lower, expect a higher price swing in foreign currency pairs. Okay, the 15, if the dollar index or a foreign currency fails to move symmetrically, smart money is actively trading. Okay, so that is just a few notes we have on this teaching. So let's go down deeper. Now, what we're going to be looking at, which is the dollar SMT divergence, which is smart money to divergence. So remember, this is mostly focused on the dollar pairs. Okay, which are any foreign asset that is paired against the dollar. Okay, that's what SMT is all about. Okay, then now I'm going to look at the two market conditions right now. I'm going to be looking at in symmetrical market conditions and non-symmetrical market conditions. Okay, so now what do we mean by when a market is in symmetrical condition? Okay, now when the dollar index makes a lower low, foreign currency makes a higher high. Okay, now what this does is that this confirms current price action and the underlying trend. Underline this word, please take note of this word. And the underlying trend is likely to continue. Okay, then the idea of stocking reversal patterns in this condition is not high probability. Okay, take note of this word, is not high probability and should be avoided. Okay, now what do we mean by that? What do we mean by that? What do we mean by when the market is in a symmetrical market condition? Okay, so now this crude example we are seeing right here, this crude graphic example is a crude depiction of the dollar index and foreign currencies. Okay, so in the one above is the dollar index. Okay, in other words, we have a market that is trading lower on the dollar index. Okay, or what we are seeing here is actually the dollar index trading lower, right? Then foreign currency is expected to be making higher highs. Okay, in other words, they should move in sync, they should move symmetrically, okay, to one another. So when the dollar index is making lower low, as you can see right here, the foreign currencies are expected to make higher highs. Okay, in other words, the euro USD is expected to make an higher high. The Great British, the GBP USD is expected to make a higher high. The Aussie dollar is expected to make a higher high. Okay, when this happens, when we have this kind of market condition, this is referred to as the symmetrical market condition, and the idea of stocking reversal pattern in this condition is not high probability and should be avoided. Okay, we are going to go deep on that. So let's proceed further. Okay, we're still talking about in symmetrical market conditions. Okay, now this is just a flip around. Okay, this is just flipping it around. In the first example, we have the dollar index trading lower. Okay, we have the bearish dollar, right here, which is a risk on market scenario. Okay, so this is the dollar making lower lows, and this is foreign currency making higher highs. Okay, then in this example, we have the dollar index, the bullish market condition. Okay, so this is the dollar index making a higher highs. Sorry, this should not be lower than this low. Okay, it should be somewhere around here. Okay, I made a mistake on that. So but this is the dollar making higher highs, right? And this is foreign currency making lower lows. Okay, so in this case, this is a risk of market scenario because the dollar is actually bullish. Okay, so now let's go down further. In non-symmetrical market conditions, okay, what do we mean by when a market is in a non-symmetrical condition? Now, when the dollar index makes a lower low, foreign currency fails to trade higher than a previous high. This is the USDS, which is the dollar index Smt Divergence. Okay, so this is what is referred to as the Smt Divergence that we have always been talking about. Okay, the dollar index makes a lower low, then foreign currencies fades to trade higher than a previous high. This is just what all SMT divergence is all about. Okay, so this does not confirm current price action, and the underlying trade, you notice the word, the underlying trade is likely not to continue. Okay, so now the idea of stocking reversal patterns in this condition is high probability and could reasonably be considered. Okay, so in situation when we have a high, let's say a bearish market, a risk on market scenario. Okay, in this example, we have the USD index making higher highs, and okay, this should not be higher than this. Okay, I made a mistake on this actually, but I hope we are getting the picture. Okay, so this is dollar index trading lower, then dollar index made a lower low, right? So foreign currency are expected to make a higher high, but in this example, in this case we had foreign currency making lower lows, a lower high instead of a higher high. Okay, so it made a lower high instead of a higher high. Now what is actually going on right here? Okay, so what is actually occurring right here is that the smart money is actually accumulating the dollar index. Okay, so money is being moved from foreign currencies into the dollar index. Okay, in other words, going below an old low to grab liquidity. So this is smart money buying on strength. Okay, this is money being moved because the underlying trade was likely bearish, right? So this is money being moved into the dollar. Okay, smart money is actually accumulating this, and this is foreign currencies being heavily distributed. This money being moved into the dollar index, and this is money being removed from foreign currency. So this is smart money distributing the currency, selling off these foreign currencies on weakness. Okay, so this is foreign currency being heavily distributed, okay, and the dollar being heavily accumulated. So this is dollar being bought on strength and foreign currency being distributed on weakness. Okay, so money is being moved into the dollar index from the foreign currencies into the dollar index. Okay, so now the probability of stocking reversal, which is in other words, the underlying trend is likely going to change when we have a scenario like this. When we have SMT divergence, the underlying trend is going to change. Okay, and we're going to get back to that. We are going to come as we go further. I'm going to explain deeper on that. Okay, so now this is just a flip around of it. Okay, when foreign currencies makes a lower low, okay, when foreign currencies makes a lower low, this is the dollar index SMT. Okay, this when the in other words, okay, when the USDS, okay, when the dollar index failed to make a higher high, in this case as you can see here, fixed to make a higher high, foreign currency makes a lower low. Okay, this is dollar index SMT, USDS SMT. Okay, this is smart money, smart money 2 divergence. Okay, so this does not confirm current price action, and the underlying trend is likely not to continue. Okay, so the idea of stocking reversal patterns in this condition is high probability and could reasonably be considered. Okay, so now what is actually going on right here is money is being moved from the USD index into the foreign currency. Okay, so this is smart money heavily distributing the dollar and accumulating foreign currencies. Okay, so when we are anticipating a change in trend, okay, we are anticipating a change in trend. What does that mean? So what this means that the idea of stocking reversal patterns in this condition is high probability and could reasonably be considered. Okay, so now we have a situation right here. We are going to come back to it. We are going to come back to this chart, and this is at the time of making this video, this was the price actions on the dollar index. Okay, so this is the dollar index, and these are foreign currency. This is a foreign currency, foreign asset, the euro USD against the dollar, right? So the euro against the dollar, paired against the dollar. Now we have a situation whereby we have this swing. We have market make a high and a higher high, then we have the market make a low and a lower low. So this is a symmetrical market condition. In other words, they are both in sync. Okay, so now the question is this underlying trend likely to change or not? Okay, when we have a symmetrical market condition, the underlying trend, what happens to the underlying trend? Okay, so that is what we are going to come back to in a little while. Let's just look at this price action. Let's look at this slide right here. Okay, so now in symmetrical market condition, an in-depth explanation of it. Now we have the DSY, okay, which is probably the underlying trend is bullish. Okay, what we refer to the change of expecting stocking a reversal pattern. Okay, what we mean by stocking a reversal pattern and the change in the underlying trend. Okay, so now in this case, for the DSY, the underlying trend is bullish. Okay, when the underlying trend is bullish, the foreign currency are expected to be bearish, right? So now as we can see, as the dollar makes higher highs, higher lows, higher highs, higher lows, the same time foreign currency are making higher highs, high, lower lows, lower highs, lower lows, lower highs, and you can see the market is in sync. Okay, so when we have a situation like this, the underlying trend is likely to continue. In other words, this uptrend is likely to continue. Okay, now the idea of stocking reversal pattern is not high probability and should be avoided. Okay, in when we have a symmetrical market condition as this. Okay, we are not saying it, we are not trying to say the market cannot reverse. Okay, we are only trying to say, what I'm trying to say is that the idea of stocking, the probability is not high. Okay, the probability is low for the underlying trend to change. Okay, when we have a symmetrical market conditions, the probability of this underlying trend, when we have a market that is in sync, the DSY and foreign currency in sync with one another, the probability of this trend going from bullish to bearish is very, very low. Okay, so the idea of stocking reversal should be avoided, but it doesn't mean price cannot do what it wants to do. Okay, price can just make a higher high and start trading lower. okay, and it can be in a symmetrical market conditions. Okay, it can be in a symmetrical market conditions. It doesn't mean the market price cannot do what it was, just that the probability of expecting a reversal is low, okay, compared to non-markets, non-symmetrical market conditions. Okay, so this is just a flip around. We have the foreign currency trading higher and a bearish DSY. Okay, so as you can see, as foreign currency makes higher highs, higher lows, the dollar index is making lower highs, lower lows, lower highs, lower lows, lower highs. Okay, so now the probability of this trend changing, of this trend of stocking reversal pattern in this kind of market conditions is very low. Okay, and you should be avoided. Okay, the probability of stocking reversals should be avoided because it's very low. Okay, so it doesn't mean the trend, the underlying trend cannot change. It can change. Okay, price is just price. We are just the probability is what we are considering. Okay, we are putting the into consideration the probability of it happening. Okay, so now in non-symmetrical market conditions, okay, in this case we have the DSY, which is bullish, which is a risk off market scenario. Okay, so now when we have this, we have the market making higher highs, underlying trend is currently bullish. Okay, so foreign currency should see some bearishness, right? Then in a scenario where we have DSY trading high, creating a higher high, but foreign currency failing to go below this previous old low right here. So this is known as smart money SMT divergence. Okay, this is just what is referred to as SMT divergence. Okay, this is smart money heavily distributing, moving money from the dollar into foreign assets. Okay, so now the probability of stocking reversal in this kind of market situation is high. So how do we apply this to our trading? How do we apply this in price action? Okay, in other words, if you are, let's say you are currently trading and you are anticipating a reversal, you're anticipating the trend to trade above an old high, move into some kind of liquidity. The one way to know if the underlying trend is going to change, probably after running into an old high or something like that, or probably maybe taking out an old high, the one way to be sure if the underlying trend is going to change is by measuring, looking at the DSY. If of course you are trading pairs, dollar pairs, okay, you are trading the dollar pairs, okay, you are looking at currencies, foreign currency paired against the dollar. Okay, so the one way of looking at your trend hunting reversal pattern is by comparing it, by looking for SMT divergence. Okay, by looking for SMT divergence. And when you have a non-symmetrical market conditions, you are then going to be rest assured that you are on the right side of of the order flow. Okay, that your analysis is accurate. One way to confirm it is by using SMT divergence. Okay, so now in this case what we have right here is money being moved from the DSY, from the dollar, and being moved into the foreign currency. Okay, so this is bought on strength and this is sold on weakness. Okay, so let's flip it over. Flipping it over, we have foreign currency right here and the DSY. Okay, so we have money being removed from, as you can see, foreign currency made a higher high, DSY failed to make a lower low, right? So the underlying trend is likely not to continue. Okay, so the idea of stocking reversal pattern is high probability and could reasonably be considered. Okay, so this is SMT divergence. This is smart money removing money, moving money from foreign assets into the dollar. Okay, so this is foreign assets being sold on weakness and the dollar index being bought on strength. Okay, so now this is one way of confirming a reversal pattern. Okay, for the pairs against the dollar, against the DSY. Okay, so now what I wanted to draw our attention to is that, what I wanted to ask is, currently we have a market that made a higher high and at the same time made a lower low. Okay, so this is why although the market is currently bearish right now, the dollar, although the market is currently bullish on the dollar index. Okay, as you can see, we are currently in a symmetrical market condition. Okay, so the probability of this underlying trend to continue going up is is still very high, okay, and the probability of this being a reversal pattern for the dollar to be bearish is very low, okay. So like I made mention earlier, although the probability of seeing a reversal pattern is low, but it is likely to happen, okay. Well, there's still probability of the dollar index just being bearish from this moment, okay, because of course, as we can see, the dollar price went above an old high to grab liquidity, right, and broke structure below. Okay, so this is a shift in market structure, and if this was going to be a high probability reversal pattern, the foreign currency should not have seen a lower low. In other words, we should have seen a higher low instead, okay. That means money has been moved from the DSY into the foreign into foreign assets, okay. In other words, we have this as the euro USD right here, okay. So for this to be a high probability setup, a reversal pattern, we should have seen a higher high on the euro USD, okay. But like I made mention earlier, this could just be the end of this trend, right? This could just be the end of the trend. The dollar could just be bearish from this moment onward, okay. But we are just looking at the probabilities of it, to likely continue being bullish is still very much high, okay, and the probability for it to be a reversal pattern is still very much low, okay. So we have to just be cautious with it, okay. We have to just take precautions as we trade with the order flow, okay. We are not going to be trading against the trend, right? So that is just all about markets, SMT divergence and market structure, institutional market structure, okay. Now, what we are going to be looking at next, I'm going to talk about the break of structure versus shift in market structure. Okay, that is one uh, that's one important smart money tool, okay, to have in your arsenal, okay. So understanding the difference between the break of structure and the shift in market structure, and at the same time your trading range, is very important, okay. So I do hope we have been able to learn one or two things from this video. Please, if you have learned one or two things, kindly like this video, and if this is your first time of coming across this channel, do well to check out our other videos and subscribe to this channel, okay. Thank you for joining us today, and see you guys in the next episode. Do have a great trading week ahead.